Welcome to the Logic Tree community and the Logic Circle and all of our friends for joining us on this live stream session, which is going to be all about DAFs beyond traditional grant making. And when I thought about, who would be best to actually share with our community, I really wanted to bring in different perspectives, and I'll share a little bit about who each of our guests are. But not only do they hold different positions within the impact ecosystem, they also have actually seen DAFs get deployed or deployed DAFs into more than grants themselves. So we're really excited to be able to open the kimono on what is this craziness about DAFs. With that, I'd love if we could start, if you could share your name, your background, where you're calling in from, and one fun fact about DAFs that you've seen in the last 6 months. And we'll start with Wolf Star.
Thank you, Chelsea. Thank you, you and Chris, and the whole Logic Tree team, and also this amazing panel. This is a great honor to be amongst people who I've been learning from for years. So I'm Wolf Star. I run the Venture Atlas. We have a handful of funds, and we help grow angel networks across the country. We started using DAFs back in 2023 with one of our partners. And from that, we've expanded to several different DAF partnerships. And I'm mostly here to just listen and learn, calling in from Columbus, Ohio. I wish I knew Bobby and Lori and Melody when we started doing DAFs, because they had it all figured out way before we did.
And I think it's really exciting to know, I think Inspire Access was a partner in this, but in Wolf's Funds, they've actually had both DAFs and, for those that we'll do a whole session on this too, PRIs, program-related investments within foundations. So one of the few venture funds that believed in that early. Lori, over to you. Fun fact, Lori is doing this live stream amidst a whole crowd and group of people, but she found a corner.
Quiet spot
to make it happen. So Lori Katz.
Yeah. Hi. Thank you. Thanks for having me here. Let's see. So I have a background really in nonprofit, public sector, and private sectors. And I work with early stage founders, mostly around mission-driven companies. And I work with family offices. And I love the opportunity that DAFs present to that entire ecosystem. One fun fact, I think mostly that I'm seeing DAFs be more than just a tax deduction at the moment, but actually there's some momentum around it. You're seeing conferences pop up around it. And there's a strategic element to it that I think is starting to be recognized by all different parts of the ecosystem. So that's what I'm excited about.
Awesome. Bobby, over to you. And Lori kind of mentioned she was in the family office, Next Gen Advisor, also startup ecosystem. And Bobby, you kind of play in some of those spaces as well. So a little bit of background and then your fun fact about DAFs that you've seen in the last 6 months.
Yeah, hi, my name is Bobby Dunphy. I've been in the space a long time. I'm actually an angel investor myself, and I do quite a bit of philanthropy. I am hell-bent on moving the hundreds of billions of dollars from donor advised funds, because I think it's largely an underutilized pool of capital. And I mapped the entire ecosystem at one point to try and discover how we could be doing that and moving it into things that have positive societal and planetary benefit. Everything I do is around societal and planetary healing. I do that in some more esoteric ways, and I do that in some very pragmatic ways. And I work in the family office ecosystem to help people understand how they can get into right relationship with their capital. And I think DAFs are a really excellent tool for learning how to invest, actually, not only deployed to great nonprofits, which also deserve it. Fun fact, we've been building a movement around this for quite a long time, and I'm really excited. This is the third call today around DAFs that I've been on, where people are starting to realize that they can utilize these tools for really good stuff. So that's a fun fact. It's also been a long road, but I couldn't be more excited to be here with you all.
Thanks, Bobby. And I will say, gosh, it only took us 9 years, but seeing it work with Wolf, seeing Lori, champion families and next gens using DAFs as learning tools, seeing Bobby say, we have to unlock these DAFs. She brought me to Melody, and I couldn't be more thrilled that Legacy Global is not only one of our supporters, but also where our DAF will actually live. So, typical next gen fashion, that came because of the trust I have through Bobby and saying, okay, if I'm going to do this, if I want to jump on board, a lot of us feel like we want to be a part of the movement, but honestly, I didn't even know where do you set up a DAF and what are your options. So with that, Melody, a little bit about your background and then one fun fact that you've seen in DAFs in the last 6 months.
I'm Melody Gatz. I've been in the DAF and philanthropic impact space since 2007. So close to 2 decades now. And full disclosure, I do run a DAF. I also have advised other DAF platforms on a transactional basis. I really love how creative we can get with donor advised funds. A lot of people don't realize that there's a difference between what the law permits us to do and what most DAF sponsors tell their holders that they have. And I don't know that this is a fun fact, but yesterday I was looking at the fact that Fidelity DAF brought in $30 billion last year in new donations, and 15 billion of that went out in charitable use. So there is a significant amount of resources in the DAF space, and more of it can and should be actively moving forward these impact and philanthropic initiatives, whether through investment or through granting.
I think that's such a great point. You mentioned Fidelity, and I know some others. And I was sitting on a panel in New York with a mutual friend of Lori and mine, Tammy Kesselman. She talks a lot about like risk and the impact space, et cetera. And when she said this, she always says things where I'm like, that makes so much sense. She basically said on this panel that we were on, a lot of next gens don't even know that they have a DAF. So I think
true.
Step one, is first of all, if your family gives philanthropically, if you're doing family businesses, investments, or investing in funds, things like that, you may want to have a conversation with your parents, grandparents, and even just ask, hey, does our family have a donor advised fund? I think so much of the time we're thinking about the other direction where it's like, and I agree with this too, by the way, parents and grandparents, hey, your DAF is just sitting there, let your kids learn on it. But also the other way as kids, I think sometimes we forget to even ask the question. So love what Melody shared about, Fidelity. There's several others. There's some great partners at LOHAS, Inspire Access. Like, first of all, kind of know where your DAF sits and then do the research on where you might want to put it. All right, so we're going to try something totally different, which I also did not tell Chris when I decided to take over this live stream. So here's what we're going to do. I asked ChatGPT to come up with a specific question for each of you that is both spicy and funny.
Okay.
So we are going to first and I haven't even read the questions. So we're gonna see what ChatGPT has come up with for each of you. Fun fact. And then secondarily, we asked our community they put together very thoughtful questions, and we'll be taking some questions from the audience.
Fantastic.
As well. So here we go. All right, Wolf, you're up first. Let's see what it says.
Good luck, Wolf.
Can't wait. Let's dance.
Okay. What's the most ridiculous thing we're currently doing with philanthropic capital that you'd never tolerate in venture capital?
Okay, so first and foremost, because so many attorneys are on this call, none of this is legal or financial advice. Got to check that box. First 10 minutes of every Zoom.
Ditto.
So first off, I love DAFs as a traditional function, where if it's for philanthropic good and you don't know where to put your money at the time where you have your liquidity or your support event, you're able to use that to support the things that you believe in traditional philanthropy and the causes that you support. The difficulty with venture capital and other forms of putting this money in is that there's a long waiting period before those funds are returned. But the whole concept is the funds can be returned and multiplied to support the work that you want to do on the philanthropic and the impact investing side. And so to get around to it, when venture capital is looking at bringing in alternative ways to fund their programs, typically there is a much higher level of minimum investment. But one of the benefits of working with donor advised funds is that several groups can come together, several next gen, several organizations, and they can have a lower minimum and still be able to participate in the education of what we're all working on.
We may need to go on mute.
See.
Yeah, that's it. Just there seemed to be.
Okay, I
And,
think.
and can I flip that question?
Yes.
Okay. So the question was, what are you seeing that's problematic or dumb that, you know, we're seeing in the philanthropic space, but not in the venture capital? I'm going to flip that. The things that we're seeing in the venture capital space that I think can be problematic is that it's not, you know, there are vested interests that are only wanting to see gains. There's only wanting to see, you know, big returns in a short period of time. What we have the opportunity here with DAFs is that we can use this as more patient capital, because you've already offset your tax liabilities. You've already got your tax, you know, you've got your deduction. Let's put that to good use. And with that, as an investee, that's the most patient capital you can receive. So it's actually really smart capital. The investee is then not, he hasn't got someone breathing down their neck because they're worried about the shareholders and the returns, et cetera, and the timelines. They can actually focus on what they're doing and actually make sure that they get through whatever valley of death, because let's face it, there are numerous ones, and actually get something that is really innovative and game-changing up into the market with great support from the people that have put the capital in as an investment. So I just want to note that there are dumb things on both sides, and I think DAF Capital is a really smart tool for both things. Just a comment.
I think that's a really important aspect, Bobby, and I'm going to bring Lori into this piece, and then we'll join. Don't worry, Bobby, you're next on the ChatGPT question. I will get to you, but Lori, I'd like your perspective based on what Bobby is kind of, you know, alluding to. A lot of what I've seen, and I can't speak to, I haven't, you know, my research, et cetera, looked at women inheritors more so than males. But a lot of times I was looking at father-daughter relationships. And I'm going to put this in the context of the great wealth transfer, right? And if you asked the daughter, like what she wanted to see in the world, she'd talk about philanthropy, change, what she wanted to give to nonprofits. But if you asked her what success looked like, she'd say, proving to my father, or the words like making sure that I am financially independent. And you've just seen so much of the impact ecosystem, or even like now that impact isn't the word, right? ESG isn't the word. Greenwashing, none of it's responsible investing is out. I don't even know what the word is. But you've been in this space, you know, for a long time. What do you think that, first of all, do you agree, and have you seen that? And two, like, how can we change the need, especially the pressure I think we put on women and girls to both, yes, meet the bottom lines and be financially successful, but also fulfill their care and their heart for what they want to see from a mission standpoint?
Yeah, that's a great question. Shall I answer that generally, or shall I answer that with respect to DAFs? Because DAFs, I think, is a great tool for that, right?
With respect to DAFs.
With respect to DAFs. Okay. So DAFs, as Chelsea, I think you're really spearheading this, is really a great educational tool on that next gen transition point, right? So it's a place for learning, right? It's a place for identifying what's important to me. It's low risk capital because, as we've mentioned, it's already been deployed. So it's a great pragmatic playing tool, if you will, to do that entire piece around what's important to me, what's this strategic play, what do I want to see now and long term, how do I diligence this, what does this actually look like, what is the story within the context of my family, what is this bringing to the table, what am I bringing to the table with this, right? What is that whole piece, and then how are we going to measure this going forward? How do I know that I did a good job here and that this is actually fulfilling what I hope it would fulfill, right? So that whole piece, that's great experiential learning, right? Now add it to the conversation with if we're talking about daughters and fathers, right? Add this to a conversation with a father saying, listen, this is what's important to me. You set up this DAF. What was this DAF designed to do? What was your thought process? And it's that conversation, that back and forth, right? So you have a substance, you have content, you have what to talk about in a very pragmatic way that also allows a daughter to be able to say, hey, this is who I am, right? Look at me, see me, and help me become the best me that I can be. And it's that conversation behind the DAF. The deploying of the capital and that whole exercise is super important, right? But that conversation of this is what's important to me, this is who I am, and the recognition of what this younger individual is bringing to the table within the context of that family story, that family legacy story, it's fantastic, right? So it's the conversation behind the actual learning experience and the deployment of the DAF.
I love that. And I think we've kind of said this in a few different ways, but just really reiterating, DAFs can be a great learning tool for your kids. And it can be a place that you start larger conversations around, your family mission, your values, etc. The story is it was definitely over 50%. I can't remember the exact percentage, but in the dads that I asked what they wanted for their daughters, it was consistently the same kind of phrase, but the general context was they would say, I just want her to be happy. So it's really interesting, right? If you look at it from the lens of the next gen versus, if you look at it from the lens of some of the elders and the dads. All right, I've decided I'm going to skip to Melody because I like the question. So Melody,
Yeah, what do you have for me?
here's your ChatGPT question. If Melody could redesign what the DAF looks like from scratch and nobody from the existing industry could complain, what's the first thing you'd change?
Oh my goodness. I am glad to have this one. I would change the incentive structure. So, and make it so that you have to separate the investment advisory piece from being the DAF sponsor itself. Because fundamentally, one of the biggest blockers to having DAF capital move, and I think it's good to have it move. I also think it's good that DAFs are different than private foundations because we can do long-term patient capital investing without worrying about 5% distributions. But it's whether or not DAF capital is actually moving the needle on making a difference in the world, whether through expenditures and grants or through investing. And right now, we have a world where virtually all DAFs, nearly across the landscape, the vast bulk of the funds are held by DAF sponsors that have significant incentives to keep the capital invested in a public securities portfolio on their platform, because those are DAFs that are also associated with broker dealers or financial custodians, and they make so much money by having the liquid DAF funds trade on their platform and having this be an added component piece that there's no incentive to encourage DAF funds to go into private markets or to be spent down. So if I could make one change without pushback or without the ability for the industry to say no, it would be to say that we need people to be incentivized from one standpoint and not have DAF sponsors in particular have incentives to significantly influence what the investments are for the DAF and whether or not capital can go in or out a bit more freely, specifically in terms of pursuing a charitable purpose.
I think that makes a lot of sense. And, in my own personal case, this is going to be shocking, but I was actually anti-DAF, and I'll explain why in a second. But one of the comments we had from our live audience members is they were like, what about the moms? And in my own situation, in my own family, we actually set up our private family foundation in honor of my grandmother and my mom. But it was really, kind of after my grandmother's passing. And I'm a little bit of a control freak. And I was like, I don't want someone else touching this. Like, I wanted to learn everything from beginning to end. I worked with our family office advisor. Her team would spend hours. I don't even know, y'all. The PDF was like this. And they're like, Chelsea, we can just set it up. I'm like, no, I need to know. I learned about 990s. Lori helped me kind of figure out through Nexus, who else is doing this? What can a private foundation do? What can it not do? What do I want it to focus on? If I don't want to pick a cause, promise I'm getting to a point. But I think I had this concern, which Melody is kind of talking about, that in a private foundation, you control it as the family, right? So, and you can change this, but in ours, it's like my parents and me, right? And in a DAF, you give up a little bit of that control. But what I've learned over time is that it's not always bad, because there's some things in which maybe you want a full-fledged foundation, but it's a lot of work. It's a lot of energy. It's a lot during tax season, all of this stuff. And you might want something, you may want both, or you might want something a bit more simple, but that buffer, I really love that Legacy Global, and with Wolf, he has Inspire Access too. We have a little bit of a buffer that's, double checking us, understanding, there are partners in some of these efforts that maybe isn't just one family. In our case, we're doing it with a collective of rising gens and next gens. So from that standpoint, one, shout out to whoever pushed back and said, hey, what about the moms?
Yeah.
And two, in my own case, I think, in the Great Wealth Transfer, I don't remember the exact numbers on this either, but we know that for the first time, underserved communities and women are getting more control over capital than we've ever had in history. So with that, I'll bring it to Bobby. Let's find out what your chat. Oh, I think yours has a little bit of
Chelsea.
Yeah.
Can I just jump in really fast?
Oh, sure,
I love that you brought that out about your private foundation, because something I think is really important to note is, as much as DAFs can be great tools when used right, they're one of many tools when you're trying to do something philanthropic or charitable or have impact in the world. And it's best used as one of the pieces that a family or an individual has within the broader scope of whether or not you have a private foundation, or you're running an operating charity, or you have a startup company or fund that's trying to have an impact in the world while also running a business. And that's a lot of what gets wrong. DAFs are going to be awful if that's all you see. Just like if all you see is the private foundation, you're going to limit yourself on the tools.
Yeah. And I think that we're seeing, although Wolf and Legal is keeping me in bounds, but I think we are seeing some folks in traditional philanthropy and traditional venture kind of looking for some solutions that blend a little bit of these worlds, right? Where we've talked about this, I want to believe that humans at least want, yes, success and to the bottom line reached and successful returns, but also really, really creative tools and community around making an impact, and being proud of investments and what we're actually doing in society and who we're honoring and supporting and building. So I think, Melody, you nailed that in terms of it's one of many tools. It's a great tool. And sometimes we don't even, if we don't even know what tools we have as next gens when we're addressing this great wealth transfer, a lot of times that's a simple gap that can help us succeed much faster. But again, you have to even know what tools you have to be able to use. Okay, Bobby, your question is, okay, imagine that you're in a room full, again, I did not write these. Imagine that you're in a room full of family offices, quote, the wealthy people, and putting their DAF dollars into something unconventional. Craft your pitch.
Yeah, so I'm actually in these rooms a lot, and my role has been to try and not only educate people but also activate them, right? And so, to your point, this is a tool that a lot of people don't know about, or they believe that there's only one point of utilization for it, and that's to do the occasional grant to a nonprofit, because often their wealth advisor or CPA or current DAF sponsor tells them that, right? And so maybe because they don't know, or because they're not incentivized to let people know that they can have greater flexibility and can use it in more innovative ways. My pitch is that I think we need to flip the whole notion of risk on its head. And when I talk about risk, I talk about the risk of not doing and the risk of doing. And currently, when in periods of uncertainty, and let's face it, we're in a very uncertain time, I don't think there's going to be any time that there will be greater certainty. And so what we need to be thinking about is actually moving capital into places that are going to actually shore up society and the planet in ways that we all think, from whatever our perspective is going to be useful. And so when I talk about this, I talk about risk appetite, but I really do believe that the risk of not doing outweighs the risk of doing right now. And let's not sit on our hands, but utilize capital that has been de-risked. You've got your tax deduction, put it to work. Put it to work in ways that make sense to you. Put it to work in ways that fill your heart. Put it to that make sense for your family, whatever it is. Like, the way I look at things is equal parts heart, strategy, and execution. Without all of those three elements, it won't work, because you've got to have the grit with the heart, you've got to have the strategy, and you've got to be able to execute on that. So utilizing, and this is what I talk about, it's like, why don't we look at ways in which we use the donor advised fund to invest into something that you really want to, you've always wanted to invest in, that you care about, but you think it's too risky. It's very early stage, or it hasn't been proven out. This is the perfect capital for it. It can move fast. It can move, it can move quickly. It can act first. It can deploy fearlessly, and then double down. Once you do that, and you have, there's some success, perhaps there's a return, it goes back to your DAF. You get to cycle that back as many times as you want as an evergreen fund. It's really smart philanthropic bang for buck, right? So that's already a benefit. And then you get to utilize your own investment capital pool to double down on that once you've de-risked it. So there's ways of doing this that actually take the risk element out. And once you step into doing something that you thought was risky, but is actually fills your life with meaning, you do it again and again and again. So that's my pitch.
Yeah, I think what Bobby is talking about is almost like you're putting an investment kind of hat on a philanthropic vehicle. And I think we need to see more of that. Like, there's a reason we do, Chris and I have done these convenings with families and founders and experts and all this stuff, and venture capitalists, and people are like, oh, I would never meet this person. Oh, I'd never meet this person. And we forget sometimes, I think, it's an ecosystem, right? We live in a world that's an ecosystem. And if we spend our time with all people that just know about our things and agree with us, then we're not really operating the best that we can. And so I'll turn, this is not a ChatGPT question. This is a Chelsea question, but I'll
bring it back to the human, please.
Bring it back to the humans. But wasn't that fun? I will, give this over to Wolf a little bit, but we've had a lot of back and forth, and I would say really pushing a little bit for what can we do in a venture ecosystem that celebrates, this younger community, but also operates within the traditional ecosystem and how it needs to work. And so I'd love you just kind of share a little bit about, our shared, but also your experience in that, because you've done it successfully now. Gosh, I don't even know. You're on fund 3 or 4 several times.
And I'm just going to say, I love this question.
I do as well. Plus, I love just, even if this wasn't a live stream, any excuse to hang out with the four of you is phenomenal and educational on so many levels. We're in a very interesting moment where I'm talking to a bunch of folks who are interested. If their Aunt Jamie and Uncle Ken have said, we're holding this in, they've got enough people talking about DAFs in a way where it wasn't happening a year ago.
Yeah.
In fact, in a third of my conversations over the last week where I brought up DAFs, they've said, you know that this is becoming a very busy space. A lot of people are focusing on DAFs. And my answer is, that is great. There's such a huge opportunity where we don't have to work against each other. We can find ways to work with each other to empower and uplift all of these different processes, because they're as much work as we could do and the other 50 amazing people are doing in the industry, it's barely going to touch the total number of dollars.
Absolutely.
But if we can change the way that it's treated in our generation, we could make huge strides based on technology for how this operates for the next 20 generations or the next 5 generations, however we look at it. And so we're at an incredible time on this. When I meet with family offices, one thing that gets them so excited about DAFs are that there isn't a K1 attached to it.
Oh, yeah.
So typically with a venture fund, if you invest, and this is true for angel investing to a great degree as well, you pretty much know that you're going to have to file an extension on your taxes, because you're reliant on every single one of the companies hitting everything perfectly, getting everything back, and then the fund being able to manage it. And some do it better than others, but that is a big concern with Uncle Billy and Aunt Sue's, that it's going to hold up the entire family's systems for the year. One of the fun things which we've started to run into is by pitching the donor advised fund option, the families get excited about it, the next gens get excited about it. And then at the end of the conversation, they ask, can we participate from the for-profit side as well? Like, we want to be able to do this in order to support the next gens, get them the education. Because the education, quite frankly, is one of the most valuable pieces we can have right now, when traditionally a lot of family offices in preservation of wealth want to wait until the next gens are at a certain age to be able to start their investing journey. But to Bobby's point and to Lori's point and to everyone's point, if we're able to de-risk the opportunity for them to be able to get involved, to learn the systems, to learn the processes, when they sit down at the Thanksgiving Day table, it does not matter that it came from a donor advised fund, or it came from the family foundation, or it was their actual dollars that went in. They're an investor. Even if on paper they're technically a donor from their fund or through one of the other vehicles, they're able to say, I invested into this company, I invested in this fund, let me tell you about this. And that is phenomenal for founders, because then they have all of these people throughout the region that are their greatest cheerleaders, because they have a vested interest without putting true risk capital in, and they can follow it along. And I think one point that was phenomenal earlier was that the families see the success. I think it was Melody that pointed it out, that if a company is doing really, really well, and they came in with the nonprofit side of the money, but then there comes a point where they can raise more, these families now trust those founders. They've seen the founders go through the crucible. They've seen them at the hardest point. And then it's really easy to call up those families and say, okay, this group is doing a B round, and you've watched them for the last 2 years. Because of pro rata or other things, you get that first option to participate. And that is how we get the families to move towards more social return on investment, because the next gen have proven the track record, have the knowledge, and have been involved.
I think that track record is so important. The next gen community, we're always thinking about, okay, if we want to put more money into social enterprise or impact or responsible investing or blah, 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 whatever it's called, whatever it will be called, Rising Gens will help us figure it out. But, that's a huge piece, is we have to prove, one, that we're capable of handling the responsibility. In our family, there's a 2030 goal of less K1s. So that's always on the horizon. So anytime we can avoid that, I get a win or a point. But I think that, hey, you know, sustainable development goals, K1s, I'll say. But I think that, you know, that's a really important point. The other thing that Wolf said, and I'd like to turn this part over to Lori to flip this a little bit like Bobby did from venture to philanthropy, to flip to startups and nonprofits as well. So I actually got my start in the nonprofit sector. So I was a part of a very, very tiny team in my 20s. And we were at an interesting but similar kind of trajectory in the philanthropy impact space, where we were one of the first kind of giving platforms or giving days. And that was a totally new concept. The fact that companies could get involved and people on their phones or computers could give in the community, that was wild, right? But what we saw, because often, and this is what I'm going to talk to Lori about, often, and even in this, when I said, hey, I'm doing this donor advised fund live stream, and maybe Chris and I will even publish this, but it is a really clear split of startups and nonprofits that were saying, how do we access this DAF capital? And families and Next Gen saying, how do we start with donor advised funds, and what, you know, how do I set this up for my kids? And so we're seeing that kind of all come together. But I would say similarly, the more we shared within that, you know, we created a campaign and a giving day, and Google started talking about, et cetera, then more people got on board, and the money and the impact started exploding, right? We raised whatever it was, $10 million in 24 hours for 750 nonprofits. But that was because that engine or that ecosystem was actually working together. So Lori, you sit on both sides of the fence, actually all sides. You've done family office, Next Gens, you've done startups, you've done cross-border, you've done nonprofits, you know, for-profit, nonprofit, hybrids. In terms of what you're seeing, like on the startup nonprofit side, what are some successes or things to be aware of for those that are trying to access, you know, this massive amount of capital that's just sitting?
Yeah. I'm going to start by saying it's challenging, right? And then I'll go back to the startup front. But I want to flag one thing on the Next Gen Family Office in terms of setting up a DAF. Your DAF sponsor is actually really important, right? And choosing that DAF sponsor actually allows you to do more or less, right? And so you want to be very clear about what you're looking to do with your DAF. Every DAF can do impact investing, right? But ultimately, you make recommendations to your DAF sponsor, right? And so ultimately, your sponsor, the responsibility is on them. So in terms of nonprofit, right, grant, right, it's much easier for them to check a nonprofit grant, right? Like they just need to verify, is this actually a 501c3? Does it work? It's much easier check, right? In terms of an impact investment, it's like underwriting, right? It's the due diligence and they don't always have the teams, right, to be able to do that, or they're not set up for it, or it's not their priority because it's not where their incentives are. There's a whole slew of things, right? And so it may be that they would like to take your recommendation, but they can't, right? Because ultimately the response, so Legacy Global is a great choice, right? So there are firms that are set up to help with this and to be as creative as everybody's mentioned but that conversation is super important, right? And that's what now we'll go back to the startups, right? But some of those DAF sponsors are easier to get to, right, from a impact investing perspective, right? And so it's the identification of who is looking to give me that patient capital, who is open to that, right? So if you go backwards a little bit, not every DAF sponsor is set up to do that. There's regional sponsors, there's local sponsors. So it's the same thing that you would say as a startup. You would say, well, what families are interested in my mission or my impact? What geography I'm in? How would you? What VCs are interested in what I'm doing? Right? You kind of have to do that same research exercise of who are these DAF administrators who are open to this type of access for for a impact investment, right? So that's kind of how and it's tough. It's really hard for startups to do that. It's starting to get easier. We've got AI, we've got ChatGPT, we've got conferences, we've got folks who are doing things like live streams on DAFs where you can learn about these things, right? So you've got all these things that actually make it easier as they start to tap into that ecosystem. But it is challenging. I'll just start by saying it is challenging.
Yeah, and I think
Can I comment on that, Chelsea?
You both can. I'm going to go to Melody first.
Okay. I just want to comment that, like Lori said, it's challenging. And I hope everybody listening to this can know that sometimes when they're told no by a DAF sponsor that they're working with, that doesn't mean that the DAF can't do what they're trying to get to. There are rules for DAFs. We want to make sure that it's actually charitable in nature. But most DAF sponsors either have a blanket limit on what activities they permit their DAF holders to do, which is different than what DAFs are legally allowed to do. And a lot of people don't know or understand that distinction, and or they have a very specific way of doing impact if they have an impact program. They say, well, this is the only way we do this. You go through these channels, you take our preferred options. So I just want to encourage, similar to Lori, that people do their research. There are not quite as many DAF sponsors out there as I would like to see that have a fully open platform, but they do exist. Legacy is one of those, and hopefully we'll see more and more in that space. So if you're getting no from your current DAF sponsor for something that truly is philanthropic or allows you to invest in something close to your heart, do your research and find a DAF sponsor who knows the difference between, yes, we're going to follow the law and do it right, but we're going to facilitate and enable you to accomplish the purpose that you're trying to accomplish.
Yeah, I was just going to say before we turn it over to Wolf's comment as well, like for a long time, I felt this need to keep a lot of what I was doing private, because I was like, like this is like personal, or this is my family, or I didn't want to talk on panels anymore and all of this stuff. And somewhere along the way, I met Lori lost in an elevator, Wolf at a South by Southwest conference, Bobby we kept seeing each other over and over again. And Bobby kept whispering, like, you could do this, push harder, push hard. And so, also respect to my husband and co-founder. He was supposed to lead this live stream, and he was like, Chelsea, you've been talking about the need for movement in DAFs. Look at this for years. Like, you have to lead this. So what I would say is, exactly to Melody's point, it's a process, and I'm not here to push. I have great things to say about some of the options, but I think it's, you find the people that are, at least for me, when I found the people like Wolf and like Lori and Bobby and now Melody, that were rowing in the same direction and agreed. I always say, like, are you values aligned, right? Because money moves on trust. And I knew I needed somebody to have the staff that genuinely loves the fact that we have 11-year-olds. And that's not for everyone, right? And genuinely loves the fact that we are going to do impact investing and we're going to support underserved impact founders. And genuinely is excited about the fact that we're going to do education with universities and, do all of this stuff. And for some folks, they're just not incentivized, right? And I think that's a whole other conversation about how we change incentivization structures. But for now, I would just say, if you're exploring, first of all, if you find out you have a donor advised fund and you didn't know you had one, you have choices. And the second, which Melody is saying, and this is why we went with Legacy, as well as Inspire Access as a team, is because I really asked, I put poor Melody and Emily and Bobby through the ring there. I was like, can we do this? What about cross-border? What happens if this? Can I write grants? But once you find that team, know that you have a choice and ask the tough questions. And just exactly to Melody's point, just because their answer is no, doesn't necessarily mean it's illegal. It may just mean, they may not just be the right partner for you. But Wolf, I've talked a lot. I know you had something you wanted to add in. Hopefully you haven't forgotten it. And I think we'll we'll kind of open it up to Wolf and to everyone for last sort of thoughts or things that you want. Let's see, we've got policy leaders on here, family offices, next gens, rising gens, some nonprofits, some startups, the community to know that we should be thinking about in our next year and our next 20.
Amazing. And I'll be brief because I mostly just want to hear from the rest of y'all. But things are getting better with groups like Legacy, with Inspire Access, Let's Play Money, all of those groups. The options are becoming more clear. And to the point earlier, nothing about this is something you can't do. It's a question of whether their systems are built to be able to make it happen. So back in 2023, when we first wanted to do a DAF investment into one of our for-profit impact funds, as we called it, one of my investors was very firm. He wanted to make it happen, but the foundation that he ran his DAF through just said, there's no way we can get this across. This is something we do not do. And he very bravely pulled a bunch of his money out of that DAF partner and put it into a new DAF partner. And he moved a lot of money in order to do that, to make a fairly small investment to us. But that definitely caught the attention of the DAF, which he pulled the money out of. He said, if you can't do with my money what I'm asking you to do as the donor that is advising this, I will take it somewhere that can. And DAF in general, like the whole foundation world is changing because of technology. There used to have to be one person for every 20 families to send Christmas cards and boxes and whatnot in order to make sure there were enough touch points. Now, one DAF agent in most of these foundations can work with 10, 20 times that many people with the same level of touch points that these families expect. And we're still running into a lot of these foundations who are saying, no, this is not what we do, governance, all these other pieces. But they're starting to come on board because they're starting to feel that people are looking at the legacy. They're looking at the DAFI. They're looking at these other things. And that is the motivation they need for alignment, is being able to say, either figure out a way where you can do what we're asking you to do, or we have other options. And I don't think that was true 3 years ago in so many different ways, but it is absolutely true right now. And those foundations are having to align. And if we work with them properly, they can be great partners. We just have to walk them through it alongside the donors.
So I have a real-time question as we're closing out for probably Lori and Melody. And the question is, which I think is a great one, can you explain a little bit more about separating the grant side of DAFs versus the investment side of DAFs, and how does that work? And I don't know, maybe Lori, you want to start, and Melody, chime in.
I'm not sure. So from the donors perspective, right? So
Yeah.
I think that's a strategic question, right? In terms of what you're looking to do with your DAF, right? So I've had women come to me and say, I hope to empty my DAF every year. I want to start again every single year. I want there to be nothing in my DAF. Their concept is, I don't necessarily need this pot of capital to grow. I want to deploy it. I'm much more focused on the action piece, right? I have another woman came to me very recently and said, I actually don't really want to deploy for the next 15 years. I've named my kid as a successor on this DAF, and I want them to have a really big pot to be able to play with. Now, we had another conversation there around like maybe there's some impact investments, right? But I think it's that question, I think, starts with what's the strategy, right? What are you looking to do with this capital? The technical piece, I'll from the DAF administrator, I'll leave that to Melody. But that's the idea for. You want to come up with your strategy. Why'd you create the DAF in the first place?
And Melody, maybe broadening that question in a little bit. Probably should have started with this, but like, what is your definition kind of a donor advised fund? What can it do? What can it do in grants and investments? Obviously, that probably needs a whole hour. But
yeah, that's a whole big conversation, but I'll try to summarize briefly. With the donor advised fund, we're either investing and holding the money, or we're spending it, granting it, and using it without any expectation of return. That's true of most financial assets or holdings. And I think it's wonderful when we have donors who come and say, I want to spend down everything in my DAF all of the time, because they're focused on very, very current needs. That being said, DAFs under federal law have a wide scope of what they're able to invest in. And there are a lot of investable pieces that can have similar philanthropic or social impact in a really positive way. There's a lot of for-profit companies that, if they have capital investment in their research or their programming, will make just as big of an impact on the world as some of our best charitable organizations. And that's a personal decision for every family, but recognizing that with a donor advised fund, because we don't have mandatory spend down rules, and it's offset by the fact that we do have donor advised fund holders who want to spend down their DAF every year. That's a wonderful balance to have. Some DAF holders can have those assets grow in perpetuity. And the real question in my mind is whether or not that growth is fostering social change, charitable impact, and making the world a better place in the meantime. Are we structuring the investment portfolio in a way that doesn't undercut the charitable impact that you're trying to have through your grant program? And something I like to tell people is, when you're looking at the charitable space, the vast majority of budgets for operating charities is usually spent on fundraising. If we spend down 100% of what's raised for charity every year, we have a problem when we have the next disaster. We have a problem funding the next round of research. So there is great value in not having every account spend down while also having some spend down. And that comes back to, can we invest the funds in a way that foster having resources when we have the next disaster hit, and for future generations to make the world a better place? And can we invest those funds in a way that move that needle forwards towards the positive change that every donor intends?
Yeah, and I'm going to jump in here with a little, just to broaden on that. Obviously, DAFs can be used in the more traditional grants, recoverable grants, forgivable loans, etc. But they can also be used for zero interest loans, revenue-based financing, loan guarantees, green and impact bonds, pooled impact funds, and screen public equity ETFs. Now, so there's a broad, the beautiful part about DAF Capital is it can be deployed across the whole spectrum, whether it be something that you're really, really wanting to invest in into a direct investment into a company that you think is really amazing, but you want to de-risk your capital that way, and or a fund for that matter. People just don't really realize this. One of the big questions I think that we all need to be asking as wealth holders or people that are actually advising wealth holders, the big question I think we need to be asking right now is, how much is enough? How much is enough to live a comfortable life? There's no judgment around how much you think you need on a weekly, daily, monthly, yearly basis as a family or whatever. But how much is enough to do that? And then what are you doing with the remainder? I think the key thing is to be looking at what your passive investment portfolio is currently doing, if you have one, because it may not be aligning to what your value set as a family or as an individual member of that family really wants to see. So take a look at that, and then move it into a place that really aligns with what you see that you want to see happen in the world, and take the step, take action. It's really simple. It's actually not. It's not something that you need to actually go to someone to get advice around. You can do it yourself. It's a really, really simple process. People make it feel like it's not, but it is. And so I think it's just step in, feel into what it is you want to do, have a look at what it is you care about and want to see in the world, and then do it, is what I would suggest.
I love, Bobby, kind of ending on that note. I'll say, whether it's live streams or in person, with Logic Tree, what Chris and I have built and hope to continue to champion is, we've seen, and I said this earlier, money moves on trust. but action, we felt like the critical reasoning. So logic is the science of correct reasoning together. That's the piece that we felt like we could contribute to most. So a lot of people have great ideas, right? But if we can't come together and sort of reason through to different solutions, and actually the difference of opinions is a positive thing, then not enough of us are getting to the action. And I think to Bobby's point, I would just echo not only like what is, when is it enough, but also what more do we need to see to realize that like this next generation needs support and earlier education. I won't say who, but like it drives me up a wall. I'll keynote and I still have, institutions say, well, we typically educate them around the age of 42. And I'm floored. Because it's like, I can't imagine. I'm 33 years old. And if I hadn't have had educators like Wolf, like Lori, like Bobby, like Melody, there is no freaking way that I would be prepared to do what I'm supposed to do in this world. So I'll kind of close it with this. But I would say thank you so much for all of you joining. If you want to come hang out with us in New York, all of us are going to be there from September 17th is our event, which will focus on the future of health, philanthropy, capitalism/democracy. We'll do more live streams like this. Chris and I will send out a form. We want to know what is most helpful. And we really want to be as transparent as we can. This is my version, I guess, of the people that show you along their wedding. But I think for us, we're going to show you along the journey of what does it mean to do collective giving, collective investing. And I'm sure we will fail, succeed, and everything in between. But I'm so grateful to every single one of you that isn't just joining a live stream, but is actively trying to make this change. So thanks, guys.
Thank you.
Thank you.
Thank you.